Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Thursday, February 8th. Today, we got initial jobless claims and continuing jobless claims, and they came lower than expected, 218,000 instead of the 220. And also continuing jobless claims, 1871, we were expecting 1878. So both lower than the previous one. That means that the labor market remains strong. The Fed wants the unemployment to go higher and jobless claims to go higher, but that is not mandatory to control inflation and to cut rates. That's why, even though we didn't push on jobless claims showing weakness on the labor market, this was a tick for the market. But more important than that, it's the amount of Feds that are talking. Barkin has been speaking 2 times today, and also a couple of Feds also speaking about inflation, that they think that it's going to continue lower, but the discussion on rate cuts, it's not longer their focus right now. So the uncertainty remains tight. And that's why we have a lot of choppiness in the market. This is the 15-minute chart, and this was the consolidation in pre-market, and then the move lower into the manipulation. As one I was expecting that, because open interest in both ES and NQ futures were skyrocketing yesterday. So there's big money still in the market. So I was waiting and watching this 15-minute fair value gap. I was expecting huge manipulation to grab liquidity to the downside. And even though we kind of did that, we did that in a very choppy way and didn't provide me with a good setup. And that's why I missed this trade in the overnight. This was a divergence down here, as you can see, lower lows on the Nasdaq with, let me show you down here, with higher lows on the S&Ps, means pretty bullish to me. So at that point, I was expecting displacement. 2 weeks down here, pretty nice, but look at this chop. And then we took the first liquidity level into this inverse fair value gap, and I was watching also this fair value gap, bullish fair value gap into the open, chop, 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 and then the open came here, we dumped. This was the manipulation move, but look at this slow grind to the upside to take again pre-market highs. Come on, this is not a proper setup. So again, waiting and waiting, manipulation move to the downside, watching this inverse, and then this displacement. And this is the only one that I took. I took this fair value gap, the white one, into this inverse. So basically taking this with the stop at the low of the fair value gap into this. This is yesterday's high liquidity, and that's the only trade that I took. 30 points, $600. I mean, that's enough for me. But things that I would like to highlight for you if you continue trading. There's a fib projection from this high to this low, and projection means that I think this was a manipulation move, and I wanted to go to the 2 projection to the 2.5. That's 17,900 on the 2.5, and we are right now hovering the first 2 fib retracement. I think this is a period of accumulation, and as you can see, there's this point of control, the yellow line, still in the middle of the range with already manipulated moves. And I think what is key to understand is that Apple is quite weak. If we see a strength like this on Apple, and if we see Nvidia also pushing, making new highs, and dollar weakening a little bit, so right now we are checking these boxes, I think we can see at least high of the break into 17,900. Now, this 17,900, the 2.5 level up here, it's at 17,920. I think the big round number is 17,900, but the focus, I think, is not NQ. We have to go to the SPX cash S&P market to really see this. All this liquidity that is resting at these highs has not been taken out. We have this, and we have the high of day. And look at this, 5,000 on the SPX. We took that on the ES futures, but we never did that on the cash market. So on the ES futures, there's also a lot of liquidity. This one up here, it's pretty neat. Look at all these stacks, stack liquidity, stack highs, low resistance liquidity that I think we are going to take in the next 30 minutes, I would say. So if watch the ES, if the ES starts pushing this liquidity into high of day, Nasdaq is going to reach the final projection for 2 and 2.5. If you continue trading, once we reach this 17,900, be really careful on trading to the upside, because I think shorts will start accumulating. We can see higher pricing for sure, but I think the manipulation move projected higher, it's what you need to take care about. So watch dollar, watch the ES, the SPX also into 5,000, and also Nvidia and Meta, that are the two hot stocks right now. Meta, remember that it's running quite hot right now after earnings. We have the same kind of pullback with liquidity. Yesterday we took these two liquidities, this and this one. So we have these on Meta, we have these on the high of the pullback, and then continue higher. This is the so-called bull flag, but I would say these shorts are going to cover pretty hard if we start moving higher. So Nvidia and Meta are your friends today to really gather the sentiment into the afternoon. ES 5,000 in the cash market, it's also an indicator for you. And never miss dollar. If dollar starts doing strong moves, either upside or downward, be really careful. And that's how you have the edge on the market. Nasdaq just took the high of days right now. Let's see if it holds into the 9,000. 9,000, it's up here. So let's see. I'm already good for the week. Tomorrow is Friday. Don't ruin your day either today nor tomorrow. Take those gains, take those profits. Today is a choppy day, but we are still trending higher. And more than that, be really careful with this thing. I think it's in half an hour, the 30-year bond auction is going to happen. And this is key for treasuries and for stocks. Fed Barkin has also spoken, and it's just saying the same thing, but look at this 30-year auction. Be careful here, because volatility will skyrocket at that time. And I think that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. That 30-year bond action is quite important for treasuries and stocks. Be careful, in half an hour is going to do that. So manage your risk, and remember that patience and discipline are also key for your success. Stay safe, everyone, and see you tomorrow.